Welcome to Pressure Points. Our topic is Nvidia earnings. And as of this recording, which is an hour after the conference call ended, shares are up 4.5%. Just before the conference call started, they were up 6%. And that's kind of where they reached their peak in after hours. At one point during the call, they were up 3.5%. And so we're sitting at 4.5%. And I'll cut to the chase. I think if I put everything together on the report for April, the guidance, the commentary on the call, and then read between the lines, I think the stock's going to move measurably higher over the next month. I don't know what's going to do tomorrow, but I think over the next month, 2 months, it's going to move measurably higher. And the reason why is that the core business is on fire, and that is the pressure point. And before I jump into that, I just want to acknowledge that most of the conversation around Nvidia is going to be around what's the impact of China, when's that going to change? But I think it really misses the central point, is that the core business is on fire and is evidence that we're still early in the AI infrastructure build out. And one way to conceptualize about how strong it is to look at the growth rates. Another is to look at the forward revisions to guidance. And so if we go back and look at into the October quarter, this is October of last year, when they guided for the October quarter, those estimates, the revenue guidance was 3% higher than where the street was at. And then when they guided for the January quarter, it was 1% higher than the street. And now when they guided for the April quarter, it looked more or less to be in line or slightly below where the street is. But that, of course, doesn't factor in what's going on with China. So if we back out the impact of China, and we'll call that the core business that's left, basically everything excluding China, they would have raised guidance by 13%. So to recap, over the past year, the four revisions would have gone +3, +1, +3, +13. And the reason why you get a +13 revision is that something bigger is going on, is that essentially that analysts are trying to figure out what demand is. There's some cross currents in terms of what's going on with DeepSeek and different views in terms of how much compute's going to be needed, what happens with trade. But at the core is that this is growing faster than what people are expecting. And I think there's been this kind of consistent message from Jensen that we're still early, but that kind of a revision, +13% revision, is, I think, underscores just how early we are. And why that matters is because we start fast forward in 2026, calendar 26, and that street, those kind of 24% growth, it probably suggests that we're going to be north of 30% after everything is said and done and we normalize for what's going on in China. So that's one lens to look at the core business doing exceptionally well right now. Another is to look at the revenue growth rates. And so there's a long list of numbers here, but stick with me, is that in the April quarter, the one they just reported, they had a negative impact from China of $2.5 billion. If you would add that into their results, the revenue would have grown 79% year over year. And then if you take their guidance for the July quarter and add back in 8 billion in lost revenue from China, that would imply revenue growth of 76%. So it's a decline from 79% to 76%, but that decline is far less than what people had been expecting. Analysts had been expecting before the curves came in. So this is before any sort of, there's some slight downward revisions to numbers starting kind of in the middle of April. But at that point had been expecting 60% growth for the July quarter. In other words, that the street's expectation for revenue growth for July, once you cut out the noise of China, went from 60% to 76%. So that's a material step up in growth relative to expectations off of a higher base. It's harder and harder to beat those numbers and erase those numbers when you get numbers bigger and bigger. And Jensen said at one point that they're doing 72,000 of the Blackwell chips to hyperscalers alone each week, and that's growing sequentially. And so to put that into perspective, just that hyperscaler business alone is kind of on track to do $40 billion potentially in the July quarter. and their guidance was for 45 billion. So there's clearly something going on. This ultimately is going to be a lot more than a hyperscaler. That will be the nick on this, is that hyperscalers are doing really well. Like, what happens? What's the encore to hyperscalers? But it's pretty clear that there's still a lot more room to grow. And on that note about the room to grow, you take other data points about what OpenAI is doing, about this recent $11 billion data center that they're going to be building in Texas. Elon's comments last week about a million GPU data center, which that would be 30 to 40 billion in revenue. I mean, that piece alone could add 15, 20% to the overall growth. You start to get a sense like there's still room to go here on just that core business outside of China. So that's the pressure point. Nvidia investors should sleep well at night knowing that we're early in the AI infrastructure build out. Hard to say it, but I think it's true. Second topic is related to China. And where do I begin? Just let's start with just the facts, is that it had a negative 2.5 billion impact on revenue essentially in April. When the curbs came in, that meant that they can't sell any more of these H20, these lower powered chips to China. And so they shut that down. That cost them 2.5 billion in revenue. They had a $4.5 billion write-off in the quarter, but that's neither here nor there. But I think most important part is that negative 2.5 billion impact in revenue in April. And then they said that impact is going to be about 8 billion in the July quarter. Now, of course, any good analyst on the call starts pushing, what's beyond that? What can we see beyond the July quarter? Is this something that's going to persist in 8 billion per quarter? And they were really good at holding the line, not giving us much in terms of to expect outside of the July quarter. But I do want to mention one comment from Jensen. I'm going to quote him. He said, in quote, "The president has a plan, he has a vision, and I trust him in terms of end quote, in terms of everything that's going on with these curbs and Nvidia's kind of role." And separately, as Jensen made it clear, was emphasizing that they want to do more in the US when it comes to working with like TSM to build these advanced chips. And of course, this is an important topic for the White House, because the White House fundamentally believes that the US needs to have a go it by their own strategy. And therefore, you don't want to rely on other countries to produce some of your most advanced tech that basically we run on. And NVIDIA is the cornerstone of that. And so it's really important for the White House to have NVIDIA endorsing this concept of Made in America. And Jensen was clearly on display of reminding investors that he has bought into that and reiterated his confidence in the president. And the reason why those comments are important, well, they didn't talk about what the impact of these curbs is going to be on the October quarter, for example. The fact that they're emphasizing those two pieces, I believe, reading between the lines, Jensen is saying that they're in conversations with the White House, and the White House is telling them that everything is going to be fine. And my sense is that everything is going to be fine, is that probably these chips and where NVIDIA, what they can sell to China, ends up falling out in some sort of a trade negotiation around tariffs, and this becomes part of a bargaining chip, essentially. But it seems to be, based again, the comment from Jensen, he has a vision and I trust him. That comment seems to be that NVIDIA believes that this ultimately is going to kind of sort itself out. And my guess is the market's generally going to fall in that camp going forward. But that's part of the reason why the stock isn't going to fully appreciate this strong fundamentals, this fundamentals on fire that we talked about, and the pressure point, because there's still this kind of outstanding question about if in fact we have 8 billion per quarter hit to the business. So my read on this is going to be part of a trade package. When's it going to be resolved? Maybe 3 months. Of course, hard to say. If it's not resolved, then there's going to be further downward revisions, but I think investors are progressively going to kind of look at that core number ex-China and focus on that growth rate. The good news is that in 3 more quarters, it will have anniversaried itself out. And so essentially, even though that the overall revenue number would be 15% lower, that's what we're talking about. This is a 15% of their total business. You'll start to see better revenue, better growth rates, because the comps will essentially reset once they've anniversary those. And so, big picture on China, it's a mess, and sounds like the company feels like this is going to be something relatively short-lived. The last piece was just related back to how early we are. That was kind of like a reoccurring message from Jensen. He does that every quarter, so hard to put much more into that, but I think it's just worth mentioning that the shift to reasoning and AI agents is going to create a new wave of demand for their advanced chips. So overall, felt like this is a really good quarter, and it's going to take some time for the market to kind of sort out when China's going to get better. But give credit to Nvidia for doing an amazing job of keeping demand moving in the right direction. On behalf of Pressure Points, I'm Gene. Bye for now.